have.
Thank you so much. First of all, I want to thank Shalise and especially Gabby for giving me the opportunity to be with you tonight. This is always fun for me. I'm truly an accounting nerd, as Stephanie can tell you. We've known each other for a lot of years, Shalise and Stephanie and I know the wonderful things that they're doing at the Management Center. So I want to thank you. My goal tonight is to give you some ideas for things that you can do to make taxes a little bit easier, a little bit less painful for you, and also to give you some ideas about how taxes can actually benefit you. So we'll save that toward the end. I look forward to your questions, and let's get going. Okay, first of all, Gabby and I got together to plan our session, and we looked at different topics that they thought would really benefit the students. So, what I've been doing after we had our talk was doing a lot of research on a lot of tax preparation software packages. So, being the nerd that I am, I had a lot of fun going out and exploring all of these software packages and playing with them and trying to see which ones were the most user friendly and which ones we really don't want to have anything to do with. Okay. So my goal is to show you how to use a couple of software packages, one super simple, but a little iffy in my opinion, and another one that I think I can recommend highly for just about anybody. And then at the end, we're going to talk about something called VITA and enrolled agents. We'll talk about those. So I'll save that for later. Okay, our four goals then are tell you how you can simplify your income tax, how to use a simple computer tax package or two, look at VITA and enrolled agencies. All right, everybody gets worried about this time of year, at least, by the time April the 1st comes around, we start worrying about our taxes. We're going to have them done. And I'm going to tell you, accountants are the worst. I do it too. But the truth is, you don't really have to worry about it if you do some small things to prepare. It can take away all the stress, and actually you can look forward to filing your taxes because a lot of times you guys are going to get a refund, which is a happy way for that to happen. All right, first step, save your documents as you go. Okay, you should make a point of making sure that you save all of the important documents for your tax return. Now, how are we going to do that? Obviously, some of them come digitally, some of them come in paper, whatever. Some of them come in the mail, some of them don't. I recommend this for simple tax returns. Just get a tax box. Get a box that's convenient enough for you to get to when you're going through your mail or reading your computer stuff. Print off what you need to print off, save what you need to save. Just put it in the box, put a lid on it, and put it away. You want to have it handy, but not visible to anybody else that might be in your house. And if you really get adventurous, you can put income in one envelope and expenses in another envelope and other things to organize you a little bit more. But this is a simple way to do it. I have a lot of clients. This is what I've had them do for years. It is super simple to just simply put all your stuff in a tax box. So I have kind of pretty one. I actually hand these out to my clients and we put them together sometimes for people, and it's made a world of difference for them. Okay, so what forms do you want to save? Okay, so these are important forms for you to remember. Number one is the form W-2. W-2 is going to show income earned from your employer, but it's also going to show any income tax that's been withheld by your employer. And that is what you're using to file your return, those two main things. Although you will have to put the income, your federal income tax withheld, your Social Security and Medicare information. These top 6 items here are going to be things that most people have to put into their tax return. There can be some other things, but those are the primary issues. So you should get your Form W-2 from your employer no later than postmarked by January the 31st every year, which means they may be coming in the mail right now if you haven't gotten them yet. Some firms will have you look them up online, but they're required to provide that to you. So watch for it if you haven't gotten it yet and put it in your tax box. All right, another one is Form 1099. 1099 can be for all kinds of things: rents, royalties, interest earned on your bank account, all kinds of things. But this is a form of income reporting, so be sure to save your 1099s as well. The 1098E is the one that reports your student loan interest. This is important, and you want to be sure you have it because you can always deduct your student loan interest. Even if you don't itemize, you can deduct student loan interest 100%, most of the time deductible by most of our students, but it's based on income level. So deductibility can phase out if you make a lot of money, but for most of us, we're going to be able to deduct that student loan interest. Be sure to save the 1098E. And then there's the 1098T. This is coming from TW if you're a student here. And this is going to tell you the amount that you have paid right up here for tuition and fees. Even if you've borrowed money to pay for that, by the fact that you borrowed, you have paid tuition and fees. So you want to be sure to keep this because this form can help you qualify for different kinds of credits on your tax return. And credits can be the kind that actually return money to you, even if you don't have any federal income tax withheld. So you want to be sure to keep this form. If you work, you're going to get a 1095B. The 1095B tells you whether or not you have health coverage. Now, this is really something you're going to just put in your tax box for the most part and ignore if you have health coverage provided by your employer. They have to send this out to you, and on your tax return, it's just checking a box. But we are supposed to keep this on record and all of our tax records on file for a minimum of 3 years. So be sure you keep this one as well. This is one that I pulled up when I had forgotten about it when I was looking for childcare information. The Form W-10 is really interesting because you can use this form to request information about your child care uh, company. So you can use this. You fill it out down at the bottom. You're the name and the address of the person requesting the information, and then you have to give it to your childcare provider, and they are supposed to give you all of this information, including their taxpayer identification number. And that's one way you can look to see if they are registered properly. Now, this is interesting. There is no requirement for a child care provider company to give you a specific form about what you have paid to them for child care. But it's important that you know that, again, because there are child care credits. So this is a sample letter that you can use if you don't have one to give to your child care provider. This can be your mother, if you're paying your mother for childcare. If you're paying someone, even if it's a family member, you can ask them to fill out this letter for you. Notice it's going to have the parent's name up here, or guardian, if you're not the parent, but you're taking care of the child. You can see the children's or child or children's names, the period of time that the child care provider provided child care for this child, and the street address, and of course the amount is going to go there as well. You also want to be sure that you have access to all of your bank accounts. Most of us have those online right now, which is fine. I like to keep them in both in hard copy and soft copy, especially if I have tax clients that are doing this, because tax clients don't need to have to share their online banking data with IRS agents if we have to do something to talk to the IRS. So hard copy can be very helpful. If you're audited ever, you will want to request hard copy of your bank accounts, which you could do, or print them out yourself. That's certainly something you Remember, you should keep all tax data for at least 3 years after you file your return. Not before, but after. So once you file your 2024 return in April this year, you should keep that data for at least 3 more years through April of 2028. In some cases, you want to keep it longer than that, but you have to be in trouble with the IRS for that. Okay, so let's start out. We're looking at a simple tax return on a free tax package. Okay, Jane Jones is our taxpayer. She's single. She graduated from high school in May of 2024 and began attending TWU in August, and she's working as a student assistant, which is her first serious job. She's worked before, she's done some part-time stuff, but this is kind of a serious job, her first one. She's 18 years old. She shares a 2-bedroom apartment with 3 roommates. That may sound familiar. That's kind of what I did when I was in school. Okay, so these are the 2 tax packages that I looked at that were free, and I wound up looking at choosing the TurboTax package. It was a little less problematic. Now, I want to tell you a little bit about these tax packages before I go on, because there are things about them that bother me, and I want to make sure you know about them. First of all, they demand that you share your tax information with them. You have to sign off on allowing them to use your tax data before they'll let you prepare the tax return for free. Number one. Number two, you also sign off on letting them keep your tax data before they let you sign it for free. Having said that, I'm not a big fan of these free ones, and I would encourage you to consider a low-cost one, which I'll talk about a little bit later. All right, here's how this thing works. You go to turbotax.com. You ask right down here at the bottom to create an account. Sorry, got a little carried away. So down at the bottom, you can see you've clicked this little thing down here and you create an account. Well, I've already done that, so we're going to move on. When I start, they say, okay, do you want to do personal taxes? Do you want to do I have a QuickBooks account with Intuit, or is there another business? Well, I clicked on personal taxes. Then this nice lady comes up and waves at you and says, here's what to expect. We're going to ask you a lot of questions, and we just need you to answer them so we can help you prepare your tax return. Here's some questions. All right. Here's what we think could apply. They're just putting it up here based on age and things. If you have children, you click that. If you paid rent, you click that, which she did. I want to maximize deductions. I donated to charity. I have a W-2. I'm self-employed, whatever. They're going to ask you a lot of questions, and you just click in whichever one of these apply to you. If you don't know if they apply to you, you'll see little question marks, or they'll see, do you need more help? Whatever. So you just want to check everything that you think may apply. It does not hurt to overcheck, okay? You can check things and then you get to it and go, oh, that doesn't apply to me, and then you just go right past it. But you want to be sure to check the things that you think might apply. All right, so here we go. She has a job. So we've got a W-2, Ms. Jane does, and she paid for college tuition. So then they go on after they ask you to buy their package about 2 or 3 times. They ask you, are you comfortable doing this on your own? Do you want to be able to ask questions when you need it? Or you prefer to just hand it off to somebody else? Well, obviously, option 3 is they're going to charge you for it. That's fine. If you want help when you need it, there are some buttons to push for help. I'm going to say you can be comfortable with your own, on your own, excuse me. Okay, how do you file your taxes last year? Well, Jay didn't file last year. She didn't make enough money to worry about it. She made less than the minimum. It didn't matter, so she didn't file last year. So here we go. Let's fill out some information about Jane. Here's her name, her date of birth, and her occupation, a student worker. We also need Jane's social security number. You'll notice this is nobody's social security number. I just put some numbers in there. What state do you live in? Were you a full-time student? Yes, she was. When she started, she was a full-time student. Did you support yourself? Yes. Can you be supported or be claimed as a dependent by somebody else? No. This is Jane cannot be, she has to pay for this herself, as a lot of us have done. Were you married? No. Single. Do you have any children or dependents? No, she did not. Did you make any money in any other states? No, didn't work in any other states. So they stop every now and then and they say, okay, this is the data we have on you thus far. Look at it, make sure it's correct. And if it's not, press the edit button down at the bottom. We're going to assume Jane got it right. Okay, cool. Jane, what's your income? Well, Jane got this nice W-2 that we talked about earlier. And you'll see that she earned $20,475. This is, boy, we're paying students assistants really well. And she had $1,944 withheld from her pay for federal income tax. Okay. So this was her gross pay. We had this much federal income tax withheld. Social Security, Medicare information there. Because we live in the state of Texas, there's nothing at the bottom about state income tax. We don't have it. All right. We have to put the employer's ID in there, and you'll notice I made up a fake number there too, 971515151, which they have to know because very often the IRS is going to link your tax return filing with TW's tax information that they filed. Okay, now here's your W-2. Here are the different ways you can do it. I will tell you, I tried to snap a photo with my phone. It did not work very well. I had to go in and correct some things. You can upload it from your computer. So if you have a digital copy, that might work really well. I didn't try that. I went ahead and typed it in myself. So here we go. Here's the information. Notice the control number down here. This is the W-2 number for TW for 1,000 years, probably. And information. Here is the information of wages, federal income tax withheld, Social Security, and so on, the numbers. And then they say, congratulations, guess what? You've already got a $1,356 refund. Now, why? Because of something called the standard deduction. Individuals, single individuals like Jane, get to deduct $14,600 from their taxable income, the $20,000 something that she made, right away. No questions asked. Now, here are all the standard deductions in case you were curious. If you're married, filing jointly, $29,200, separately, $14,600, and head of household, that's when someone may be single but provides benefit, maybe a single parent and has a child that's dependent. Jane, of course, is single, so she got the $14,600. All right, now where can we find some more benefits, some more tax benefits? All right, did you get a 1095A? That would be your healthcare information. So Jane says, yes, TW provided me with my healthcare information. Tax breaks that they've automatically computed, okay? Expenses, scholarships, student loan interest, which we're going to start, and a credit. These are things that we think are going to work for Jane. Number one, did you get the 1098-T? Yeah, she did. She paid, and I apologize for how sloppy this is, but I could not get it to fill online. She paid, according to her 1098-T, $5,436 in tuition and fees for 2024. Okay, so fine, let's type in the information. Again, here's TW's bogus ID up here, and she paid $54.36. She didn't have scholarships or grants. She didn't have anything else. So that's the amount that they're going to focus on. Congratulations. She qualifies for the American Opportunity Credit, which is one of the two types of education credits. The other kind is the Lifetime Learning Credit. I wanted to show you quickly the difference between the two. look at this. You can make up to $180,000 married filing jointly. Of course, half that if you're married filing separately or single. But this credit that we got, the American Opportunity Tax Credit, is 40% of what you pay. And this word refundable makes it a magic number. That means even if you paid in no taxes to the IRS, you could still get this money back. It can be sent to you even if you have nothing paid in. This one, of course, is not refundable, so we don't really see that one as often. All right, now let's look at what you paid in interest on your student loan. The bank is going to send you this form, excuse me, the 1098E, and you'll see that Jane only paid $150. She was just getting started with school in the fall, and it was borrowed from Denton Bank. So what are we just going to put that right in there? The student loan, $150, and the Affordable Care Act is probably not going to apply to us. All right. They keep telling you how great you are. We've increased your deductions, which has lowered your income tax from the $20,475 by $14,750. Look at this. Your standard deduction plus your student loan interest are always deductible. And then down here, we have a $1,573 American Opportunity Tax Credit. All right. All the way through this, there will be stops and checks where they'll say, hey, we found a problem. You need to check this before you move on. Are you sure that's the right number? Are you sure you didn't pay any Social Security in this year? There are some people that are exempt from Social Security and don't. They'll ask you all kinds of questions. You just kind of click on the little exclamation point, and they will tell you whether or not, things are okay or what you need to check. Okay, so finally, we finished Jane's return, and she is getting back $2,944. How does that work? They give you an explanation here, but I put it up here to make it easier. She had $1,944 withheld from her payments, what she earned from TW. She also got a $1,573 education tax credit, minus the $573 she owes on the portion of her income that's taxable. That means that the IRS is going to send Jane a check for $2,944 once she files her tax return. This explains every one of those things that we just walked through. And then this is a comparison. They give you a comparison of last year to this year, which is kind of nice when you file both years. Okay, now I've got another return I'm going to go through, and you guys stop me when I need to stop.
Pam, we just have a really quick question, and I don't know if this is something you can answer now or
Yeah.
it's but if someone did their tax return last year but forgot to include their 1098T, how do they fix that?
No, if they forgot to include something that could give them a benefit, you can file an amended return and still request that money back.
Okay, so they file an amended tax return for
An
last
amended
tax
tax return. It's perfectly fine to do that. We all make mistakes sometimes, right? I do encourage you to try to do this yourself because there's a lot more benefits in learning how to do this. Okay, so this is the tax package that I bought. I'm going to pull it up. Hang on just a second. That I thought worked out really well. Ironically, it was with H&R Block. Can you guys see this okay? Not
Can you
yet?
share the
Okay.
screen?
It's not working. Yeah. No, hang on. Oh, here we go. I got it to come up. Okay, I apologize for the size of this. I can't make their stuff any bigger, which is really annoying. But this is what it looks like. Okay, so you pull up this tax package. Don't look at the number. I've already calculated this one. I'm just going to run you through it. I'm going to say I was nicely surprised at how easy this was to use and how beneficial and how much stuff was on it. So they're saying, okay, first of all, if you filed last year, we need all of this stuff. if you served in the military, so on. You're gonna see lots of questions that I'm not going to do. Now, this is another taxpayer. Her name is Susan Smith, and Susan has a daughter named Sally. And Sally is 2 years old. And so Susan is filing as head of household. As I told you earlier, that's a different filing status than single, based on people who are having to care for others. You can file head of household if you're caring for aging parents. There's all kinds of things. If you provide more than 50% of the support for someone, you can file head of household. If you're a single person, that can be very beneficial for from tax purposes. Okay, so here's Susan. We added all her information, her phone number, her address, and all sorts in her Social Security. She's lives in Texas. They gave us a summary. We're saying, no, we don't want to see the state things because we don't have to do it. All right. Susan was a full-time student and she also worked. This woman's killing herself. I don't know how many students I've got that I've seen that are like this. She does have a dependent, her child, Sally. Okay, were you married? No. Let's look at your earned income and support because she is going to be eligible for earned income. Were one of your parents alive? Here is where we put Sally's information in. So we edit it and here we go. Sally Smith, she's 2 years old. This is her Social Security number, which we now get whenever children are born, by the way. She lived with us the whole year or with Susan the whole year. Again, review and make sure it's correct. Sally's finished. All right, now what other income do you have, Susan? Wages from a job. So I did take a picture with this program and the W-2 information went through very easily. So it's just a little bit bigger program, but here's the information that went in. You'll see here, including the cost of her health insurance as paid for by her employer. She doesn't really have a lot of other things going on, so we're going to buzz through a lot of this stuff. Oops. She did have a scholarship, a small scholarship. She didn't have any cryptocurrency. Her scholarship was $500 her first semester. Foreign accounts and financial assets. Nope, she doesn't have any money overseas. And there's a whole lot of other stuff they ask you about. So they summarize here, her other income is only $500 for the scholarship. She paid student loan interest. She paid $675 to Denton Bank. And again, the form filled really easily when I just took a picture of it and uploaded it. Again, I'm buzzing through this because a lot of this doesn't matter. I have some charitable donations. I did not pay state. Oh, I did pay local income taxes. Sorry. We're going to skip through all of these because her standard deduction is more than anything she gave away, more than her charitable donations by a lot. Okay, for sales tax purposes, we have to give them the state sales tax amount, which is 6%. Are they giving us percent? No, 0.6. Okay. They calculate our sales tax and we fill in anything that has to do with it. She is going to get a standard deduction of $21,900 because she's head of household. Now credits, she gets childcare and a tuition credit. None before. She definitely has childcare expenses. Florence Jones, and again, I could open that, but I'm going to stop. Florence Jones took care of Sally Smith and she paid her $3,600. Here's her tuition, $5,776 Susan paid in tuition. She's head of household and she can claim the earned income credit. She cannot be claimed as dependent on anybody else's. We're finishing. Okay, let's go back here. Her earned income credit has not been done yet. Okay. She's going to get a $2,878 earned income credit based on the revenue she generated and the fact that she has a child. Her child care credit is $1,700 and her nothing else goes there. Let's see. She's also going to get she should get an she only got an $88 credit for her attending school because of her other credits. Everyone has health care. You have to tell them that, and so on and so forth. Okay, so we've pretty well gone through her tax return, and what they're going to do now is give us a tax summary. She made $31,550. We get to deduct $675 for her interest on her student loan. She gets $21,900 taken off for her standard deduction, and her tax payments and credits are $76.88. With her credits, she's going to get back a refund of $7,688. That includes her earned income credit, her child care credit, and her overpayment for her income. Okay. Stop share on that. That one was hard to see, I know, and I'm sorry, but I'm telling you, it's a much better package than the other one. Okay, a couple of other things that I wanted to talk about. VITA. VITA is the Volunteer Income Tax Assistance Program. We have Shalise and Gabby and I have all tried to do a VITA program here on the TW campus, but the problem is we never can get people a good place for them to park. It's really been hard. We did have some people that work here who came for tax assistance, but it is a place where students can volunteer, adults can volunteer, and you get tax training for free. Now, how do you qualify? You have to apply. I'll come to that in a minute. Okay. This is going to be to help people who make $60,000 or less in total income. It will help people who make more than that if they have disabilities or who have English as a second language. All right, for students and for anyone else, I said for students, but actually it's for anyone that's interested. You can complete a VITA registration form. So you can sign up and say you're interested. You have to sign up for volunteer training when they send you a schedule, but before they're going to let you do the training, they will do a background check. VITA is promoted and actually funded by the IRS. So the IRS has to follow its rules in terms of tax preparers. And so there have to be background checks before you're allowed to help. But you can complete training with them. And there's two levels of training. There's one that's about 9 hours where they're going to do a very minor amount of training where you're going to learn how to do a simple tax return on your own using their software package. Okay, that's definitely something worth doing. Another type of training, it goes about 6 weeks. I've had a couple of students who wanted to work in tax when they got out of school, go ahead and do the extended VITA training. It is great. I'm going to tell you, it is a wonderful opportunity for students. I highly recommend it, especially if you're thinking about tax as a career at any point in time, which is a great career. Okay. The last thing that I wanted to share with you, and I'm really excited about this idea, a lot of people just don't know about this, and it's become a bigger deal over many years. Enrolled agents. There are 3 groups of people who are allowed to practice before the IRS. 1, certified public accountants, CPAs. Number 2, tax attorneys who have specialization, special training and study in tax. And normally tax attorneys are people that deal with really serious tax problems, okay? CPAs are going to deal with most other tax returns. Tax attorneys are going to deal with really big problems. Okay, and I know a tax attorney. I've been able to work, we've sent some volunteers out to him, and he's been great to help our students learn a lot. Okay, an enrolled agent is the 3rd group that is allowed to practice before the IRS. Now, what does it mean to practice before the IRS? It means you get a tax personal identification number that you put on your tax returns if you create tax returns for people. And you have to, when you prepare tax returns, you can do it for people legally without having a problem. And you can represent your clients before the IRS. You can literally go to represent them. As a matter of fact, you can go for them. You don't have to have them come with you. You can go for them and handle things if there are issues with the IRS. So enrolled agents are really important, and they are really, there's a real shortage of them, number 1. Number 2. Okay. We'll get to the requirements to be for. Now, what are the benefits? 1, do you ever want to work for yourself? Do you like doing tax returns? Because I think they're kind of fun, but I'm a total nerd. If you like doing this, and Stephanie does, I know, then this might be something you want to consider for a career. It's a great career for you to work at home. You can work for yourself, or guess what? Recently, CPA firms have begun hiring enrolled agents in mass. And here's why. There aren't enough CPAs. We have a vast shortage of CPAs. So if you're interested in being an enrolled agent, you can go to this website and look at it. What are the benefits? Again, you can have your own practice. You can work from home 100% of the time. You can work for a CPA firm. It doesn't require a particular degree, but I encourage an accounting degree with taxation classes that will help you be much more successful and have a lot more knowledge to be beneficial to your clients. Okay, that is my presentation for today. Here is my information. If you want to email me about anything, I'm always glad to help you. You can always call. Thank you again, Gabrielle and Chalice, for giving me the opportunity to be with you today. It's been a pleasure.
Yes, thank you, Dr. Baker. This was amazing. If anyone have any questions, you can mute yourself, well, unmute yourself and ask the questions. But I do have one question particularly. I know you went through different items that students should put in their tax box. Are there any other tax write-offs that students could have when they're filling their taxes? For example, I know a lot of students put tithing within their budgets. Could they write that off on their taxes?
I really appreciate your asking that question, because a lot of people don't understand how that works these days. You have the option of deducting one of 2 things: what you actually spent in terms of state taxes, sales taxes, which we don't have any state taxes, charitable contributions, medical expenses that exceed 7.5% of your adjusted gross income. So of those 3 things, you can deduct them if they exceed your standard deduction. A standard deduction, as we talked about earlier, for a single person was, let's go back to that just so you can see it, $14,600. So if you spend more than $14,600, you can deduct more than that. Now look here at married filing jointly. Not many people, they have changed the standard deductions to the point to where very few people spend more than their standard deduction. That's the bottom line. So for students, unless they are spending, if they are single, unless they're spending more than $14,600 on those items that I talked about, in medical care, it's only in the amount that exceeds 7.5% of your adjusted gross income. So it's not even all your medical care, it's just the amount that exceeds that. Unless you're spending more than 14.6 on something, those other things, you don't need to worry about it. It's
Okay,
just not worry about, but that's a great question. And notice down here, 29.2 for married filing jointly. And by the way, if there's a disability, if someone's blind, if someone's over 65, they keep adding to that. It's like $1,500 for every additional thing. If you're head of household, you're a single person and you have one child, you get $21,900 automatically deducted. So yes, you can keep that information and it's valuable, but I don't see many clients that go over the standard deduction. I have some who are very wealthy, who give a lot of money away, who go over the standard deduction, but I don't see many. Great question. Thank you for that.
okay. I have a question. We have two questions in the chat that are about the same thing. One, do I have to include any information in my tax return if I have a high yield savings account where I earn interest? And
The amount of, yes.
and the
Let's,
second question is the same thing. Do you put interest earned from a savings account? Where do I put that?
yes, let me go back to that and I'll show you exactly where. There is a place where you say you have earned interest. And let's see, let's go to the good one. This one won't work very well. Just not coming up for me. I'm sharing that. That's it. Okay. At the first of the tax package here, Susan didn't have any interest, but the truth is, right here, what makes this one so nice is you can just click on income. And you can say, okay, what income did I have? I had interest income. I'm going to click on that. You can import the 1099 or you can enter it manually. Okay, so if you enter it manually, it's going to ask you, here's where you put your interest income. And it comes right off your 1099. Now, like I said, the nice thing about this package is it just has all of this income listed. So you can go, yeah, got that. Nope. Yep, got that. It's a little bigger than some people may need, but it's the smallest one I could find. It's just, they put a lot of stuff in it. Great question. Love it. Anybody else?
Okay, so what if a student earns an income but no federal tax is withheld? Do they have to file a federal income tax return?
Absolutely. If you earn over $600, you need to file a federal tax return. If you don't earn that much, don't worry about it. Just don't worry about it. You're not required to, but you have to file a tax return if you've earned income. You owe it. Now, do you owe income taxes? I'm going to say no. You may get a refund on these student education credits. And if you have a child in earned income credit and childcare credit, you may get money back. But I guess my best advice to you would be to talk to somebody about it. You're welcome to come by my office for simple questions like that. I'm very happy to answer questions like that. I can't be specific because I have a lot of ethics rules I have to follow as a CPA, but if I can see your data, I can give you some reasonable advice about that. The quick answer is if you've got income, you're supposed to file a tax return.
Okay. Here's a question. I was on my parents' health insurance plan last year and they live in a different state. Do I have to include that in my tax return, or does that only apply to my parents?
Are they providing if they're providing your insurance, and my kids stayed on mine for a long time. So if they're providing your insurance, all you have to do on your tax return is when it comes to, do you have insurance? Click yes. I
Okay.
have, yeah.
Okay. What if you're a student and you do have a, part-time job, you have earned income, no federal taxes are withheld, and your parents are the ones paying the tuition. So the 1098-T is filed on the parents' tax return. Is that correct?
It depends on whether or not, if you're a legal adult for the most part. We might have some 17-year-olds, but probably not. Most of our students are legal adults. And so the information from TWU will go straight to the student about the student. And they don't really care who pays for it, because privacy laws say we cannot give information to parents for any reason. Now, that's an important question, because if you can be claimed as a dependent on your parents' return, then you have a higher tax rate that will apply to you. It's a different kind of tax computation. It's a higher tax rate, and you will not get to take a standard deduction.
Okay. Um, the IRS recently came out with a free tax return program as well. Do you know anything about that?
I like it. I was not allowed to use it tonight. I asked for permission and I was not allowed to use it tonight because um I don't know why. I mean, I can't answer. I just have to be respectful of their wishes. If it's the one that they use for VITA, it's going to be a pretty good program. Um, the VITA program is really good. So I can't say one way or the other, but I can get back to you on that later when I have more information on it.
All right, we got more questions. The Parent Plus loan is, of course, under this student's parents, but she is the only one paying back the loan. Does that change anything for her tax return?
Again, as an adult, you are literally paying your tuition and you're paying your loans, as far as we're concerned. And the bank, wherever the student loan is, the bank is going to send that form to the person, social security number and IDs on there, who borrowed the money. Okay. So if your parents borrowed money, no, you're out of luck. But if you borrowed money on a student loan through TWU or through a bank in another way, then that will come to you, and you're an adult.
So can she claim the paying back that loan in her return? Even though the loan is taken out by her parents, she's the one making the payments.
Okay, so her parents' name is on the loan with the bank.
Yeah.
There's probably a way to do that by getting a letter from her parents
Okay.
saying that they have more or less co-signed with her. I mean, that sounds like what's happened, is they sort of co-signed with her. Again, that would require some special maneuvering. So I'll just stop there. I will not say that's impossible, because I can see ways it would be possible, but I don't think we have time to explain that.
No, these are all good questions. I love these questions. This means students are really engaged. So thank you for all these. And I would encourage you guys to definitely take Dr. Baker up on her offer to go to her office.
Sure. I'm in on Tuesday mornings. I'd love to have your company. I don't have enough students come by. So although I'm busy this Tuesday, I promise to host a lunch for some people. So let me know. You can always email me too. If I can, if it's something I can answer by email, I'm happy to do that. Again, I'm kind of obligated to follow well, not kind of, I'm absolutely obligated to follow my ethics rules on what I can and cannot do professionally. But I want to say thank you again. Your questions were wonderful. Happy tax prep. I think if you just keep your data and prepare for it, you're going to find this is really much easier than you ever thought it could be.